CEO Scott Bauer and Carnivore Trading CEO Dutch Masters. Always great to have you both. Scott, I want to start with you because with these markets, we look at the S&P near record highs. Is this what you call maybe some hopium, or is this real fundamental news that we can rally behind?
I think it's a little bit of both. You know, the optimism that is out there right now from Stargate and many of the other proposals that are out there, it's great, it's valid, it's going to be great for the economy if these things happen. However, some of the other things that the new administration, President Trump, is talking about in terms of rates must go lower, I think that's going to be a real tough job at this point, because with all of the money flowing in, or supposedly flowing in here, if the economy is growing and growing, what is that going to do? That is going to put any hopes for further rate cuts from the Fed on hold. We may even get to a point, and I'm not suggesting this is going to happen just yet, we could even get to a point where the Fed has to pivot and maybe start raising rates a little bit. So the bottom line is there is a real possibility that inflation really starts to tick up again. So, we kind of have this good and good versus good and bad scenario. All these positive things that are, hopefully going to come out of this, that does turn into a good economy, but it also turns into higher prices. If that happens, that could be some real significant headwinds for this market.
Dutch, I want to come to you because you've talked about the massive run-up that you've had. I think for the month of January, you're up over 25%, but you did it on basically 4 stocks. And the 4 stocks aren't sort of the traditional Apple and Nvidias that we talk about every day. What are you seeing within this market?
Well, I'll tell you, first of all, rates aren't going up, and the flow of funds coming in, I mean, I got to disagree, okay? Here's what we got going on. Our rates are way higher than anybody else's in the world relative to, world rates. Also, John Gray at Blackstone today came out and said something very interesting that we all need to pay attention to, and that is the rental market. Rates are decreasing faster than the government's numbers are showing us, and we are going to be in a situation where the Fed is going to have to actually lower rates. They have been keeping rates up where they're at, mostly because of a lot of sticky inflationary numbers like housing. That's about to change when John Gray's facts, because he's on the ground, okay? Don't forget, that guy is on the ground. He's got the data today of what's happening today. And so rental rates are coming down. Rates are going to come down. The Fed's going to capitulate. Trump's jamming it down their throats to lower rates. Our rates are relatively high relative to the rest of the world. They've got to come down. Rates are coming down. When that happens, we've had 4 years, don't forget. 4 years of the worst bond market on the planet, and markets don't continue to go like that. They eventually turn. This market will turn. Rates are going to drop. We're going to get a CPI print at 2.5%. The bond market's going to rally like you've never seen, and the high duration stocks in the NASDAQ are going to take off like rockets.
So I will just say quickly, I got my start in the bond market, so this is music to my ears. I could do bonds and convexity and duration all day long. I will spare our audience and not do that with both of you. So Scott, let me come to you because
we should have that conversation.
Dutch had a really interesting point about sort of those long duration assets and the NASDAQ could fly if you do get rates falling. How do you think about AI and some of the quantum stocks at this moment?
I think that it's a big open door. What do I mean by that? It's not 2000. It's not like the NASDAQ bubble where many of these companies were just, blips on the radar screen trading at just excessive valuations, not making money. Many of these companies, most of these companies now are profitable and making money hand over fist. So I think that the investment coming into the space, that is amazing. And I think that is going to be fantastic for the marketplace. I absolutely do disagree one thing here with Dutch, that he is saying that rates are going down. If rates go down, I agree with him. The NASDAQ flies. I think right now, though, what we are seeing, and yes, the bond market can turn, but the bond market is a lot bigger than the equity market. A lot of people don't realize that. That is the lead for right now. Can that turn in a month, 6 months, 12 months? Absolutely. Be careful what you wish for.
All right, Dutch, you want to comment on that, or can you pivot with me to talking about one sector that you like here, which is the financials? We heard Trump talk about that today.
Yeah, the magic new sector for Carnivore is the financials. We love financials. We think that Goldman Sachs and RJF and Robinhood and Morgan Stanley, I mean, these are some of our favorite stocks. We think we're ahead of a 12 to 18 month run in this sector. And I got to tell you something, we've never been so excited about the environment that we're in right now, because it's been 3 or 4 decades that we've waited for a setup like this. I mean, Trump coming out and lowering taxes to 15% for corporations who make stuff here. What, are you kidding me? Get out of here. I mean, this is America, man. We are going to rock. This is going to be so fun. So get on board, get long the right sectors, and you're going to win.
Scott, final word to you. Reading through your notes, you're talking a lot about some of the VIX call buying. For our audience, super smart, I'm sure they know this. VIX is a volatility gauge. Call options, or you're sort of betting on an increase in that. A little bit of the fear gauge, a little bit of an increase in sort of the volatility. Am I right, and why?
Absolutely, and the VIX pit trades right next to me right here. So I was just in there talking to a bunch of the brokers and the traders. There has been massive upside call buying over the last week or so, not just going out short term to March, but going all the way out to July. And I'm not just talking about 20-ish. You know, the VIX right now is trading, as I look up here, about 15.5. So I'm not just talking about 20, 25. I'm talking 35, 50 strike calls. Massive buying. Why is that? A, because volatility, in my opinion, is too low right now. But B, more importantly, I think that institutional and big funds are looking at this and saying, if these tariffs take hold, and if that inflation number starts to rear its ugly head again, we could see a very quick sell-off. I'm not saying that's going to happen. They are getting that protection right now, and we've seen what's happened the last few times that we've had a sell-off. We didn't just see the VIX go up, 2%, 5%. We saw massive overreactions. I think that's what they're playing for.
All right. Well, love having both of you. Scott Bauer and Dutch Masters, thank you. Next time we're going all bonds. I promise.
Thanks,
we'll do it.
I love it.
All right. So just to recap here, the S&P 500 hitting an all-time intraday high. Initial jobless claims ticking up from an 11-month low. And Alaska Air Group beating profit and sales forecast. Meanwhile, EA Sports not in the game at this hour. Its own goal from its own FC25 franchise has its stock getting the red card from investors. Details on the drama straight ahead. And later, a new wildfire is popping up in Los Angeles. It's causing more concerns for homeowners there. The agency founder, Mauricio Umansky, joins us in studio to tell us how Hollywood's real estate market is coping with the destruction of so many luxury homes. He's first on Fox Business. The Claman Countdown is coming right back.